Hello again, Maverick Currency traders. Hope everyone's doing well. This is Socket here, and I'll be flying solo today while Rob is away. And hope everyone is also having a good rest of the summer and the last weekend before the Labor Day. So, hope everyone's doing well and getting ready for this upcoming week. As we rotate into fall trading, volatility comes back, and this is where we get a little bit more excited for the market. So let's go into this week's currency room and take a look at what happened last week. We'll be going over looking at broad market analysis, doing a currency basket analysis, and making sure we are pairing the right currencies. So we'll be taking the top currency setups here. So let's get into it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So last week's price action was a lot positive in the equity markets. I mean, a strong turn looking at the equity markets going from a -2 to a +2. So that's sort of a big change in the market. So overall, the equities looking better. But Friday's jobs report is really where we saw some turn of numbers. And I'm interested to see what happened next week. The bond markets, bond yields did pull back. Remember last couple of weeks and last couple of months, the yields have been rising. So we are seeing the bond yields pulling back, but we did see some pairings, majority of those losses on Friday after that weak job support. And lastly, the crypto market continued to slide lower. There's no love for cryptos. Again, we said it before, cryptos is not an interesting market right now. Overall, every sort of rally is getting sold off. So this is where we're getting a better price action out of the cryptos here. So no buying anywhere in sight. So let's pay attention to the last week's economic numbers. And we had a lot of data that we need to pay attention to. Let's just start with Tuesday. We had a massive sort of movement in the markets off of this Joel's job openings. This was the biggest slide that we have seen in the last few months. So remember, we have this job opening being really sticky. So it started to fall down to 8.83 million versus 9.49. That was a big miss. And we saw a big move happen in the dollar, in the yields, and in the equity markets off that number. On Wednesday, we have the ADP numbers. The private number came out of 177 versus 194. So the expectation for going into today's jobs number was a bit more on the weak side. But look what happened. Today, we got the numbers. It was 187 versus 169. So the headline looks good, but take a look at it underneath. We have the unemployment rate going from 3.5 to now 3.8. I believe this is the highest since last year, 2022, back in January or February. So a big jump there. We also saw a drop in the average hourly earnings, down 0.2 versus 0.3. So this is a number that the Fed is really trying to achieve. You know, they're trying to slow down the labor market. They're trying to cool down the demand. And this is what they're really looking for. So initially, the markets kind of took it as good news because right now bad news is good news for the markets. But later on, as the equity markets opened up, we started to see that the equities started to see this as a negative news, as a weak jobs number. So I'll be interested to see what happened next week as the volatility gets back into the markets. We started off really well, but we are ending off on a negative note in the market. So something to kind of pay attention to. Let's take a look at last week reviews and take a look at the way we were in velocity going into this week. So remember, dollar was really strong and so was this franc. And then yen and the kiwi was the weakest, and there's all these other currencies in the middle. We'll see how things kind of pan out this week as we saw some sort of back and forth movement. Now let's start with the numbers here. S&P up 2.38%. VT stock index up 2.45%, crypto down 2.44% after being up about 70%. And remember, on a Monday or Tuesday, it was a massive move that got reversed. Gold is back-to-back gains, 1.37%, and look at this number in oil, 6.94%. So, a lot of bullishness in the energy markets, but outside of that, the equities had a very solid week. And let's take a look at the chart here. You can see in this chart we were below the 20 to 50-day moving average. On Tuesday, we got this big sort of a number here off the jobs openings, and boom, we got a nice move on the upside, and pretty much we have been staying positive since then. We are not too far from the previous highs at about 4,600, but look at the candlestick for today. We're getting in a bearish candle close. So this is where we have to see what happened next week. We are above the 20 to 50, but this candlestick is not as inviting. What I would like to better if it closes on the highs of that candle, but we'll have to see if this kind of makes a lower high and turns lower, or does it just really shrug off and continue to move higher. So remember, as we go into the fall is known for, especially the month of September, is known for the biggest drops that have come in the market. It's statistically, seasonality patterns wise, it's a negative month. October, September to like mid-October is a bit more tough period for the market. So we have to really look at this market both ways. So we have a big high and a big low. Right now we are more towards the highs than the lows. We'll have to really see if the market can break out higher, or is this going to roll over from here. So I'll be looking at both case scenario next week, and looking at outside of that, let's take a look at the currency market. I mean, a week like this, we are seeing some sort of dismal numbers, but there was some good intraday movements that we saw on Tuesday and on Friday, especially off that reversal. Dollar is down 0.29%, but overall, dollar has been on this nice bullish streak, and we got a massive reversal on Friday. So we have to really look at these charts on individual basis. This percentage change is not really giving us a big picture here. But one thing we did notice, the stronger currencies like the euro and the Swiss franc and even the pound is weakening, while we are seeing the Aussie and the Kiwi actually had a stronger close for the week. What we are looking for as we rotate from summer trading into fall trading is any sort of rotation in currency. So the Aussie and the Kiwi were the most weakest. They got it a little bit there. The strongest euro, Aussie, or euro, Swiss franc, and pound, they actually got pulled back. And now the yen is being also sideways. And the dollar is the only shining one in the past few weeks. Since the end of July, the dollar had put some really good gains here. So we'll have to pay attention to that. And then lastly, the Canadian dollar, which is just following what the US dollar is doing. So again, this is where we would rather trade the dollar than the Canadian dollar here. Looking at the cryptocurrency, there's a lot of negative numbers here. And again, if you had seen the recap on Tuesday, we had massive numbers, 5 to 10% range. So the fact that we end up closing at these lows, this is a negative sign for the crypto markets going into this fall here. So watch out if you're trading cryptocurrency markets. So let's do a quick currency market analysis. Take a look at what the charts is telling us. Look at our outlook here. And the outlook is +2. +2 is based on the chart, as we are above the 20 and the 50. But remember, I'm very cautious on the +2 because we went from a -2 here to a +2 over here. So big change here. So whenever we get this big minus to a plus in a week, we really have to reevaluate. Be careful about this direction. Like I said, I'm very open to both directions and see which side wins. Now looking at rest of the schedule, again, let's take a look at some of the other charts as well. The bond yields. I'm talking about bond yields. Remember especially the last couple of weeks in August was really bullish. And last week we actually saw some sort of reversal. And that reversal kind of continued. And look at the reversal candle here on a Friday. So it's a nice little bullish sort of a reversal on Friday. This came again off of those jobs number. Initially, like I said, this is a bad news for the market. So the Fed should be sort of backing off. That's the expectation. But again, the bond market is saying it's something different. Bond market had a good day. So we'll have to see which side wins next week. But again, keep a close eye on the bond yields, because if the markets start to fall and the yields start to fall, I mean, now that's a negative sign for the markets. But overall, what we have seen is the market continue to rise, and so is the bond yield. So, we need to pay attention to that phenomenon going into September and October. Outside of the bond yields, let's take a look at the crypto charts. And again, this is what I'm telling you about: negative price action. Every little rally is being sold, and this is making a giant low base. Remember, we have a massive support from the last few months right here. If it breaks that, I think then all sorts of the floodgate kind of opens up, and then there's probably a bigger move to the downside in the crypto markets. Now let's go into the chart, actually to the schedule here, because next week is a holiday shortened week, but we'll be turning into the currency market on Monday overnight or Tuesday early morning, depending on where you are. RBA rate statement. So next week we have two major bank rate statements, RBA and Bank of Canada. Look at that. They're both looking to hold interest rate at about 5%. So we're not expecting any change from the central banks. What we need to pay attention to is the statement, or how dovish they are. Right now they're on hold. Is the rate hikes are out of the question, and are we in going for more of a dovish outlook? And if that's the case, I think the Aussie and CAD can sort of move off of that the negative statement. So we have to kind of watch these two bank rate statements. Again, they're not expected to raise rates. That's not where the big movement is going to come from. The big movement is going to come from the statement. So pay attention to those. As we go into later the Wednesday, we have the ISM numbers from the U.S. And then on Friday, we have the Canadian employment report. So next week, it's sort of mixed on the economic data. As we get on to Friday overnight, this is an important one, China CPI. Again, this probably will have a better effect on the market Sunday or Monday the following week. But next week, we have good sort of announcements to go over. And as the month progresses, the next following couple of weeks are pretty massive as we get US CPI numbers and the FOMC the following week. So this month is going to be an exciting month with lots of news events to focus on. So the market outlook look uncertain because we are seasonality pattern turning a little bit more bearish, but the market looks a little bullish. We'll see which side wins. Central banks, two of them, will be paying close attention to it. So if you're trading the Aussie currency pairs or you're trading the Canadian currency pairs, make sure you are paying attention to those two. And as far as the economic report goes, we have three on the docket that we'll be paying close attention to. But outside of that, I think the equity markets will give enough sort of momentum and movement to the markets as we shift from a risk on to a risk off, depending on where the markets goes. So let's get into it. Let's start with some charts, and let's start with crypto charts. Well, I'm going to quickly glance through these crypto charts. As you know, things are not as exciting that I'm looking to trade in the crypto markets. Again, a lot of negative -3 and a -3 on the Bitcoin, -2 and a -2 on the Bitcoin Cash, and then everything else kind of looks the same. They're all sitting at lows, ready to break lower, and same thing with the Litecoin making a big low base here. So no signs of hope for crypto markets to go higher. Now let's take a look at currency markets. Let's start with the dollar chart. Look at how bullish this dollar chart is looking. I mean, dollar really has turned some corners in the past month and a half. Look at where we were back in July to August. August had stayed pretty strong, and look at that. We got a nice little reversal off of today's sort of initial push to the downside. We are moving nicely to the upside, but overall, we have been in the sideways pattern. But this sideways pattern still looks like a +3. We can easily break out higher off of that, especially if we get a pullback in the markets. That's the way we'll be looking at the safety play. What's a safe haven asset? We probably see dollar gets a bid on that. So the velocity score you can see going into this report was a little bit negative, but then it kind of brings us back to the positive here. So dollar again goes back on the top of the list as we go into next week. Now looking at the yen. The yen is sort of a lost cause here. It's not really going lower, but it's not really going higher. Remember, the Bank of Japan, until they make that shift, I'm not really able to see how the yen is going to get out of this little base here. I mean, the only sort of scenario that plays out for the Japanese yen strength is what if the equity markets start to drop? Do we get a safety currency play in the yen? Outside of that, you can see things a lot sideways. Not the currency I really want to trade. I want to trade what's really moving. Now, Swiss franc. Swiss franc has been the strongest currency the past summer. For the last 3-4 months, I mean, this has been a +2 and a +3. Is this time for this to roll over? Well, if you look at the charts, we were sitting at a +3. We are now down to a 0. So remember, seeing some weakness coming into the Swiss franc, and also the velocity scores kind of going sideways to a +1. I will be paying close attention to these European currencies. Remember, rotation happens when we shift from a summer trading into fall trading, and we'll have to see if the rotation comes out of the European currencies and goes somewhere else, because that's really where the money has been flying into. So the Swiss franc comes down to a 0 on a trend, and take a look at the euro. Euro is now down to 0 as well. Below the 20, above the 50. Remember, this was been doing really well, and now it's sort of struggling here. And look at where we are on the velocity score, sitting at the lows of the day. Momentum is weak going into next week. And same thing goes with the pound. Remember, pound is also the one that has done really well since last year, since bottoming it out last year. This thing has been on fire. So that thing also pulling back. This is a major level of resistance. Is really where we are seeing consolidation. So prior resistance is now support, but look at the momentum down to a -1 and -2. So right now, European currencies are showing a lot more weakness here. Now let's look at CAD, sideways. I mean, CAD is the one that I'll be really paying close attention to once it can really catch a break one way or the other. But right now, it's not trading independently. It's just trading what the dollar is doing. So let's put that to a shelf, and then we'll go somewhere else until it really starts to move independently. Now the Aussie. Everything was pointing out for Aussie to go down, and look at that. Aussie's actually up. This is the major level of support on Aussie that we have to really pay attention to. Right now, the price action is not that great, even though we got a bounce. This is a very difficult long. It's not an easy long because the overall momentum has been on the downside. But again, shift of scores. We are now above the 20, below the 50. So some shift of scores happen in both growth currencies and the European currencies. Overall, sideways, and same thing goes with the Kiwi. Even though we got a bounce here, we are right at the 20-day moving average, little below the 50-day moving average. So this score also improved a little bit because we're sitting at a -3 right at this level. So it sort of gave us a relief rally. And as we go into this sideways pattern of velocity, something to pay attention to next week. I mean, can we see a resumption of that trend in the growth currencies, or do we see the European currencies sort of take a lead there? That's something we need to pay attention to. As far as the trend goes, the dollar is the only one that's looking good as at a +3. Outside of that, some rotation has taken place. Aussie has come to -1, and the European currencies have shifted down to more neutral. So I'm really paying close attention to this, see what happens, and make adjustments accordingly. If you have been trading a certain way throughout the entire summer, this is the time to prepare yourself for some rotation here. As far as the velocity goes for now, dollar is really where the movement is. Some of the growth currencies are sideways, and the European currencies are showing a little bit of weakness. Interestingly, euro and the Swiss franc today is quite opposite. That's a currency pairing that we have talked about quite a bit, and sometimes they are more moving in tandem with each other, and sometimes we see these deviations. So today is a day where they kind of deviated from each other. So we'll see what happens next week. Let's take a look at possible trades ahead, and prepare for what's in store for us going into next week. So starting with the charts here.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
Let's start with the US dollar basket. I want to start with the fact that on an hourly chart, you can see we were looking a lot weaker, and here we are back up. So the question is that where can we go on the dollar from here? Well, if you really look at this chart, and I want to spend a little bit more time looking at longer term charts just to show you where we are at certain currencies. Dollar is at a critical level of resistance. So if we can break above this level, this can actually have a lot more room to run, especially where it was last year. That's a massive sort of a range to cover if we can move sort of that way. And we just have to kind of wait for that. Not really seeing sort of a great indication if it's going to break out next week, but something to pay attention to. Now, looking at some other important ones, let's start with the pound. And I want to go on a weekly chart just to show, or even a monthly chart, where we are at. Remember, this is a massive level of resistance on this pound basket. And I was very excited to see this break out, but then we are slowing down here. We're still above this level, which means that prior resistance is now support. But if this support gives up, then we need to make an adjustment accordingly. Now, this is the one that's up for a test along with the other European currencies. Let's go on a daily chart on the euro. You can see that it's sort of losing that momentum here. We got the highs over here, we got the lows over here. It's not looking as bullish as it was. So is the Swiss franc basket. It's kind of pulling back a little bit here. So I mean, we can kind of hunt into some of the European currencies. Otherwise, let's talk about Aussie and Kiwi. Let's take a look at this important level on a monthly chart, or let's go even on a weekly chart. Let's go back in time and see how. Actually, monthly looks a little bit better. All right, you can see that this is an important level of resistance where we have tested this level multiple times. This is the area. And each time we get to this level, here, here, and here, it's kind of trying to bounce here. So this still looks like a bear rally to me. We are still below this technical resistance. Again, I am not looking to buy these growth currencies. Maybe we'll see a rotation, but that doesn't mean the growth currencies are ready for a buy here. On a longer term chart, they look weak. So it's just a short-term bounce here. While the European currencies have had nice movements here, so maybe we can see a rotation here, because if you take a look at a lot of the dollar crosses, there's definitely more room for currencies to kind of go lower, especially taking a look at euro dollar. Take a look at this level here. Take a look at this little sort of a bear rally that we got here. We are right at the support here. If I want to be looking at dollar long against something, I like it against the euro. Next level of support comes at about 106.80. This is one of the trades that we discussed in this morning's NFP report, and so far it worked out really well, and again sitting at the lows of the day here. So I like the euro dollar going next week as we take a look at the momentum here. Then pound dollar, we got it right at the support here. If that breaks lower, I think there's a potential there as well. And lastly, dollar Swiss franc. I mean, take a look at the daily chart, pull back of the resistance, and right at the parabolic SAR. So if you're looking for breakouts, and that's exactly what I'm looking for into next week, I like breakouts on these three currency pairs. While I take a look at Aussie dollar, it had its big move. It looks kind of choppy here. Other currency pairs looks kind of more ready. But as a trader, you should always be looking at what's moving and pair those accordingly. But right now, I'm seeing more sort of a turn in these European currencies. We'll have to wait for confirmation and what happened next week. Dollar yen. Look at the dollar yen. It did break below today at about 144.50, reversed about 150 pips back into this range. I have no doubt that this will eventually, on the further dollar strength, will test the prior resistance at 150. They're sitting at 146.80. I think this is in this wide range here, but this can continue going higher off this breakout of that resistance area. So a lot of good dollar pairs. Now, outside of the dollar pairs, let's take a look at some of the other currency pairs like Euro Aussie. As you can see that some of the currency pairs did sort of give back the prior highs, prior support. It's now becoming a resistance here. So just to kind of identify the relative strength and weakness, Euro against the Aussie looks weak. Let's take a look at Pound against the Aussie, and that's likely to look weak as well. Again, just pulling back a little bit. But I mean, these are the areas where we have seen very nice movement, and those are the areas that we could see some further pullbacks as we go next week. I'm looking for some sort of rotation here. Outside of that, not really seeing a whole lot of divergence between Euro, Aussie, and the Kiwi. And if we take a look at Euro against the Swiss franc, you can see Euro Swiss franc is kind of wanted to go lower once again. This is a massive level of support, and if it breaks that level, I want to highlight where we are in Euro Swiss franc. Remember, we kind of bottomed out back in September last year, so it pretty much took an entire year to reverse that move. So we are right at the support 95.09. If it breaks below that, we're probably heading lower, and maybe that's where Euro looks like a better short compared to the Swiss franc. So some of the things that we need to pay attention to. But those are the setups, like I said, I have for now. Australian dollar, I will be looking at it on a Monday night, Tuesday morning for the RBA, and then we'll get back into the schedule for the equity markets. Let's see how the equity markets are closing here on a Friday. S&P 500, you can see it really struggled after that job support. So right now going kind of sideways a little bit here. Still kind of looking a little bit weak here. And let's take a look at the bond market. So the bond market is continuing to go higher as well. You can see nice reversal off of it, and it's just making a little high base pattern right now. So again, those three things: the bond market, the dollar, and the equity market. You got to pay attention to all these three to really make sure that you're looking at the broader sort of a picture, not just micro focusing on an individual currency, but looking at what exactly is happening. And I think that's where we'll find the biggest movement ahead. So in conclusion, we are looking at volatility to return to the markets. RBA and Bank of Canada will be in focus next week. And meanwhile, as always, focus on the velocity scores and focus on currency in play. And as always, follow relative strength and weakness. We'll be back in touch next week. We'll be back active on a schedule and keep you guys up to date on what's going in the markets and take advantage of this opportunities. Thanks, everyone. Have a good long weekend ahead. We'll see you guys next week. Cheers.